Welcome back. Today we're going to take a look at the comments. Let's get straight to it. Long Mountain says, mountains. Yes sir, family of mountains. In the top 40, we saw a lot of mountain ranges. So mountain ranges are bearish. Thick says, you never be open to the chance of a large percentage gain while trading in the top 50. No risk, no biscuit. Good advice. Fibo says, thank you so much for sharing your valuable insights. How do you use Fibonacci retracement in Elliott wave? Also, based on your opinion, is Fibonacci retracement a leading indicator? Nope, it is not. Thank you so much for sharing. How do you use Fibonacci in Elliott wave? Okay, so normally the theory for using the Fibonacci retracement tool against Elliott wave is right. The theory is that okay. So if there is a rally that comes in, right? Okay, wait. Okay, this is wrong. Yeah, okay, this is correct. So if there's a rally that comes in, right, the expectation is that if we do rally, right, bottom to top, and if we start reversing back down, the best area to be retracing to is the 0.618 golden retracement ratio, right, before we go back up. And our hope is that when this does happen, this is actually the bottom of a wave 2. Doesn't always happen this way. Doesn't mean that you should use it as like something that's set in stone. It is not, and it doesn't always happen, and you don't always get 0.618 for the bottom of the wave 2. But sometimes when you get it, it is going to be glorious, and the move is going to be really big. So yeah, so if you look over here, and if we were to consider a retracement, like let's say for example an A, a B, a C, a D, if we were to expect the E to come down to 0.618 first before it rises, you would have missed an opportunity, right? I mean, if you wanted to buy BTC, right? Did we drop to 0.618? No. Right? Did we drop to 0.382? No, we didn't even drop to 0.236, and then we rose higher, right? If you were to zoom in here, right, again, this is the inverse head and shoulders, right? But this was the 0.618 golden retracement ratio because we saw this, right? If you were to zoom in, ta-da! Look at the beauty, right? We rose higher, we retraced towards 0.618, and then that's it. Sayonara, bitches. We go higher, right? I'm going to assume that this is the 5-wave pattern that completed for Bitcoin towards the upside from, where's this? 6,000 to 10,000, right? 1, 2, 3, 4, 5. Beautiful 5 waves. After that, we collapse back down, right? So yeah, again, the 0.618 golden retracement ratio should just be used as a guide. There's no, it's just not set in stone, right? So when we were curving back up over here, right? Where is this? Right, if you pull it down from here to the top over here, we went almost touching it, but we didn't. So I'm just going to consider this as not 0.618. And after that, we rose, right? Did we touch it? No. If you had an entry at 0.618, you would not have been in the trade, right? It would not have gotten you into the trade, right? But eventually, yeah, we broke out. And right, the rest is history, right? Okay, this is a bit odd. You can consider this as a 1, 2, 3, 4, 5. You can also consider this as a 1, 2, 3, 4, 5, right? So did we retrace hard? No, we just zipped up. So yeah, doesn't always happen, doesn't always work. So it should just be used as a guide, just to gauge the strength of the retracement. I mean, like, let's say for example, you have a rally back up here, right? Okay. Yeah. How far did we retrace for Bitcoin? 0.5. So should we assume that this is going to be weaker? If we hit 0.618, would this be stronger? No. So this just serves as a guide, right? I mean, of course, the best would be 0.618, but you don't always get it. So when it comes to technical analysis, you need to marry a lot of methods together. Right? You need to marry chart patterns, you need to marry Wyckoff, you need to marry volume indicators, you need to marry all sorts of tools, right, to get a better outlook on things, and then only can you make a more well-informed decision. Not everything works, and not everything is perfect, right? Even Wyckoff is not perfect. Even Elliott waves is also not perfect, right? Sometimes it's when things are rising up, right? It's like how do you count the waves? How do you count this, right? How do you count this, right? 1, 2, 3, 4, 5. How about this? We ended here. So should this be a 1, 2, 3, 4, 5? Why do you choose this as 2? Why not choose this as 2? Right? Why not choose this as a 4? Right? A 2 here, a 4 here, 5. Right? Why? You know? Yeah. So you know when things are really really bullish, it's very hard to apply Elliott waves to it. Right? So yeah, it doesn't always work, but it's a beauty when it does. So like Bruce said, you know, take what is useful, reject what is not, add to it your own. Where are we? Ta-da! Good question. Alexander says BCH will shine when SEC goes after all shitcoins. Why would BCH be any different, right? Again, very simple to gauge the strength of BCH, right? Just see BCH BTC, and you will easily, right? Okay, we don't have it here. Coinbase is better, right? And you already gauge the strength of Bitcoin Cash. Has Bitcoin Cash been performing well? Has it been performing well? No. Ever since coming on in 2017, Bitcoin Cash has been nothing but a big slide down. Whee! Right. We did not really break above the skinny pink line and stayed above it. It's just a slide down. It's a water slide. Right. This is Gold Coast Water World. Right. We're sliding down. So yeah, it's just not good. Again, why would it be any different, right? So yeah, and you can also easily compare Bitcoin Cash to Ethereum. You do BCH USD, you choose an exchange, Coinbase, you put a slash to it, and then you put, let's say, Ethereum USD, Coinbase also. So what you're gonna get? Charts as well. So if you were to compare Bitcoin Cash against Ethereum, it's not doing well. You can see mountain ranges all over the place, right? This is a, yeah, very, very clear support line. Mountain, 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 mountain. This is something like a rising channel. Broke down, right? Again, if you look at this over here, mountain, 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 we break down. That's it. Have we seen any sort of a reversal coming for Bitcoin Cash? No. Again, this is since the beginning over here. Where is this? 2017. If you have been in Bitcoin Cash all along, Bitcoin Cash is the real true Bitcoin. Bitcoin Cash will one day overtake Bitcoin. Bitcoin Cash is going to be the real, yeah, Bitcoin Cash is going to go to 20,000, going to 100,000. Yeah, you'd be singing a, a bullish tune all the way down. And you would have lost your money, right, if you invested into Bitcoin Cash. So you have to be ruthlessly pragmatic, and you have to see what's in the charts. So if the charts are telling you things are going to be bearish, you stay bearish. Of course, one fine day, if things start reversing back up, right, if we see clear bullish reversals, then yeah, we'll be more than happy to put on a trade for Bitcoin Cash. But we're not going to be rushing into anything, right? We still need to see it in charts first. The charts will usually tell us before whatever rules or whatever news come out, we will be able to see it because we will see accumulation, right? We will see insider trading if that's what's going to happen. So yeah, right, especially when they go after ETH and mark it as a security, then all of the really decentralized coins will go parabolic. Okay, again, there are also indexes for this. You can go to DeFi USD T, I think, on Binance perpetuals, and you can see all the DeFi coins, right? It's all looking the same. It's the same thing, right? What's this? Mountain ranges. What happened? We broke down, right? Again, over here. What's this? I don't know what's this. Any clear signs of yeah, no, I just don't see it yet, right? I mean, of course, if we rise back up and we, you know, inverse head and shoulders, great. Or we get a symmetrical triangle over here, great. There's a chance that we could be reversing back up, right? Sure. But again, we're still under the skinny pink line. So we remain bias bearish for DeFi coins in general. Could we be breaking on? Yeah, of course. There is potential. There definitely is potential, but we just don't see it yet. Not yet. Not at this point of time, right? Again, simple thing as well. DeFi, USDT, perpetuals, right? Choose it, slash it, and let's say you compare it to, you were saying what? Bitcoin Cash, same thing. Bitcoin Cash, USD. Look at it on Coinbase, right? Does it look like anything? No. Right. DeFi coins, yeah, okay, probably wouldn't be doing well against Bitcoin Cash. You can argue that this is something like a rising channel, maybe a rising support line, right? That could break eventually. But when is it gonna break? Yeah, I don't know. You don't know. You don't know. In terms of the quality of chart pattern, it's just not there. It's just not there. Sure, one fine day, Bitcoin Cash might do well, right? DeFi loses its value against Bitcoin Cash, but I don't know. We're already under the skinny pink line, so yeah, Bitcoin Cash could do well, but I just don't see the chart pattern yet for Bitcoin Cash versus DeFi as a whole. Where is this? I think they're worth anything, right? If there are coins with unlimited supply, then why will anyone think they are worth anything? Yeah, but if you burn it, the rate that you burn it is faster than the rate that you mine it, then it's a deflationary, right? On the other case, all of the proof of work coins require electricity that costs money and mining equipment that also costs money, and they will always be worth something. They are not going to be worth something just because it costs money to mine and you have to buy mining equipment. Proof of work coins will be worth something if they have value, right? If one of the very good indicators of whether the coin has value is the network effect. How many people are using it? Are applications being built on top of it, right? For Ethereum, applications are being built on top of it, right? Layer 2 coins, smart contracts. It's not just for decentralized finance. It can be used for so many other things. So I don't know. I don't think just because of mining equipment. So if coming back to, I think you're talking about Bitcoin Cash. Coming back to Bitcoin Cash or Bitcoin, right? These coins fall under the category of currency. Shift F3. Where is it? Oh, okay. No, it doesn't have. Okay, let's go back here. Coins. Let's go to Bitcoin. Right. Let's see if I can get the text here. Currency. Yes. These are what you call currencies. It's not a DeFi platform. It's not perpetuals. It's not a token or anything. It's currency. Currency is something that is meant to be spent. So the value will come for proof of work coins. I'm not sure if we should consider everything proof of work, but the value will come for currencies is when you spend it. Litecoin, you're supposed to spend it. Bitcoin Cash, you're supposed to spend it. Bitcoin is supposed to bank the unbanked. Poor people from Asia or South America or Africa, it's supposed to be life-changing. Yeah, but again, the narrative has changed, right? Bitcoin is now considered a store of value. What store of value? No, it's meant to be spent, not stored. You don't get value from storing Bitcoin. You get value from spending Bitcoin. Yeah, but Bitcoin has been made in such a way that transactions cost a lot. You know, when there's high transaction, it's going to be costing a lot. And yeah, it's made to scale on chain. But anyway, that's a that's a very long story. I've said this many times before, but Bitcoin is no longer what it's intended to be. Right. If you really want to look at the real true Bitcoin, it's actually Bitcoin Cash, right? But again, we're very pragmatic. We're ruthlessly pragmatic until we see Bitcoin Cash's chart start turning bullish, right? We are not going to be doing anything. We are aware of what Bitcoin Cash is, the original vision of Satoshi, right? If you are, you can always see the white paper of Satoshi Nakamoto, right? It's supposed to be peer-to-peer electronic cash, right? Bitcoin white paper. Bitcoin.org. I'm not so sure if they've already changed it or they removed it, but yeah. But anyway, Bitcoin is a peer-to-peer electronic cash system, right? A purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. Bitcoin was invented to go around banks, right? So that's the purpose of Bitcoin. But it's now called store of value. Very funny, right? Actually, in my opinion, I think the best thing that could happen for Bitcoin and all the cryptocurrencies in the whole is that we all know that central bank digital currency is coming, right? And it would be great if the governments cut fiat on ramp, as in like switching from fiat to cryptocurrencies, and cryptocurrencies exist as a separate ecosystem from the central bank digital currencies. And then if you want to buy or sell something, right? If you start a business, let's say you're in somewhere in Asia and you are disconnected from the world and you want to sell your broccoli, and people come to the market to buy a broccoli, and you just use cryptocurrencies to make payments, right? You receive payments in cryptocurrencies. That'd be great, right? Instead of central bank digital currency, which is going to be a nightmare. We all could see the nightmare that's coming of CBDC. So yeah, you preserve your value by holding cryptocurrencies. Right, something like that would be awesome. A real true separation between these two centralized and decentralized currencies. That'd be great. So, yeah. Okay, where are we? We've gone so far off tangent. Where are we? At least that is my opinion. But if people just trading it, then it doesn't matter when it's opportunity, make money and run before it goes. So yeah, that's right. So that's why we are ruthlessly pragmatic. We're here to make money. I'm not here to be stubborn on calling Bitcoin, crap and all, but yeah. So if the opportunity presents itself, I'm going to be taking trades. If Bitcoin has a very nice bullish chart pattern, I'm going to be taking trades towards the upside, right? But if Bitcoin has bearish chart patterns, we are also going to be taking trades towards the downside, right? In, out is how we're going to do it. If it's bullish, same thing. In, out. This is where we're going to make the profit, right? So yeah, the reason why I am in cryptocurrencies is because it's very volatile compared to, let's say, Forex. Forex is just 1%, 2%, 3%, 1%, 2%. Cryptocurrencies can rise up to 50% in a day, 60%. Volatility is the lifeblood of a trader. And cryptocurrencies are volatile. And if you can read chart patterns, you can trade any asset class at all. You can trade cow dung, corn, sugar, anything that has a chart. So the reason why cryptocurrencies are volatile is because it's an emerging asset class. So that's why we're there. If you go back to the 1970s, commodities was just came out. I'm not sure if it's futures, ETFs. Not ETFs, futures, I think. Yeah. So if you look at Peter Brandt, right? Peter Brandt. Right, one of the people that I look up to, but yeah, Peter Brandt, when he was trading right in 1975 in the 70s, he mentioned that commodities was the wild west, just like cryptocurrencies, right? Very volatile, and so that's why he was in commodities. Right now, cryptocurrencies are very volatile. So that's why Peter Brandt is also in cryptocurrencies. He's trading the volatility, right? So there you go. I hope that answers your question. Rich says, hey Skinny, since you see such a high correlation of BTC with alts and BTC has a potential of dropping lower to 10K, let's say, how come you say that some alts may go higher? For example, ETC. Yeah, because we trade chart patterns. We are not too sucked into narratives or fundamentals of the coin, right? Sometimes a coin might have really strong fundamentals, right? Let's say for me, if I have to choose a coin with the strongest fundamentals, it would have to be Ethereum, right? For me, it's Ethereum. I have nothing but love for Ethereum. So yeah, and has the highest largest, widest network effect. And yeah, so even though I am a big believer of Ethereum, I'm still not rushing into Ethereum yet at this point of time at 1,007. Of course, I could be wrong, and of course, if I see clear bullish signs, then I will take a trade for it. But I still have my $666 target. I still think that there's a potential for Ethereum to drop lower. Yeah. So, based on chart patterns, I feel like the second mountain is coming. I honestly feel like we are in the midst of completing the second half. This is the first half of the second mountain. Second half is coming soon. I suspect Shanghai might be the catalyst for the fall for Ethereum. I don't know. It's, of course, if things start turning bullish, then I will be switching my bias to bullish if this happens, right? So we'll see. We'll take things one step at a time. We'll see, right? So Ethereum Classic. Okay, you're talking about Ethereum Classic. So for Ethereum Classic, right? Yeah, the reason why we are kind of bullish for Ethereum Classic is because there's a symmetrical triangle over here, right? Potential, right? Potential doesn't mean it's going to happen. And you would expect things to break higher, right? More likely than not, if you see this kind of consolidation, accumulation, you would tend to lean more towards the bullish side of things, right? And moreover, not just on BTC, not just on the USD pair, we see it on the BTC pair as well. It's the same freaking thing. It's the same thing. Sometimes you get beauties such as this, right? And sometimes you don't. And sometimes when you get such beauties, things can always go wrong, and we can always morph into something else. There's no guarantees that we're going to form a very nice ABCDE 5-wave kind of a pattern. We could still drop all the way down, right? This is how trading is. Just no guarantees in trading, right? So if you look at, let's go back to Ethereum Classic USD. So if you go back to Ethereum Classic against USD, so does this mean that every time you see a symmetrical triangle, right, you take a trade long for it? No, not necessarily, right? So for example, over here, right, this was the symmetrical that came in, right? So what happened in this symmetrical triangle that came in? We rose higher, right? But you would expect things to continue higher, right? Let's do a replay. All right. So if you look at a replay, symmetrical triangle, we would expect a very nice breakout to come in, right? You might expect this to be the falling channel breakout, and then we go higher, right? But there are some indicators which we rely on that tells us maybe we might not make it that high. Reason being that the skinny pink line is above. So we still have to break above the skinny pink line convincingly, right? Stay above the skinny pink line. And then, yeah, if we see a symmetrical triangle over here, skinny pink line starts curving back up, then sure, we will take a trade towards the upside because Ethereum Classic is already in a bullish trend. We're above the skinny pink line, but now we're under the skinny pink line. So we respect the skinny pink line by still remaining buyers bearish. I'm not saying we can't trade this, right? Because we rose all the way to $51 from the very bottom of $21, right? But yeah, it's very risky. When we're already in a bearish trend, it's better to stay bearish, right? Because we are swing traders. We swing bearish when it's bearish. We swing bullish when it's bullish. So it depends on what the chart tells us. Ta-da! Where are we? Yeah. So of course, hindsight is always 2020. Rose up. What happened? We collapsed. So yeah. Again, any others? Okay, this is another example. Let me just show you, right? Look over here. Again, I need to do this so you understand. So at this point of time, right, on the 4th of January in 2021, and you see this kind of a chart pattern forming, you'll be like, this is a symmetrical triangle. More likely than not, the direction is up. More likely than not, of course, no guarantees, right? More likely than not. And yeah, we are going back up above the resistance line, right? I mean, of course, if we fall towards the support line, we go up and we come back down and we hang around the support line, then more likely than not, the direction is down. But if we fall down, up, down, up, and we hang around the resistance line, more likely than not, it will be a break. And of course, we'll be looking for the wave E. A, B, C, D. We will be hoping to get an E so that we can make entries for it. Pump. We take a ride towards the moon for Ethereum Classic. But in this instance, right, it didn't come. We got our wave E we got our wave E above the resistance line, right? We were consolidating right above it. So this is what you call, this is one of the varieties of a symmetrical triangle. This is what you call a herniated wave E, right? A, B, C, D, E. We consolidated. We are already above the skinny pink line. Notice that we're consolidating above the skinny pink line. That's it. And then we continued higher, right? So yeah, in this instance, it worked. It worked, right? In this, where is this? In this instance, not really, right? Again, same thing over here. You can find this everywhere. It's everywhere, right? If you replayed it, right? At this point of time, right? Where was this? The date is 9th of November 2021. At this point of time, you saw this happening. You'd be like, shit, this looks like a symmetrical triangle, right? Are we gonna get the wave D completion? Are we gonna get a wave E, and then we break out? Is that what's gonna happen? Are we gonna hang around the resistance line? We break out above the resistance line? Yes? Yes? Is that what's gonna happen? Yeah, so you're not sure. I'm not sure. You're not sure. Nobody's sure. So what you do is you be patient. You wait for the price to start moving first. Move towards the resistance line. Hang around the resistance line. Or just like the case that we just saw, we break above the resistance line. We hang around above it. And then, yeah, we're still above the skinny pink line. We remain with our bullish bias. And we trade towards the upside. Right. I mean, if something like this occurred, right? But of course, eventually, it didn't happen, right? What happened? We collapsed. Right? Symmetrical triangle came in, and then yeah, we just went close to the support. We were just hanging around the support. We never went back up above the resistance and hang around the resistance. We hang around the support. So more likely than not, it will be a break. So this was where the break of the skinny pink line came in. So this is the start. The moment you see the skinny pink line break with huge volume, this is the start of bear season. So yeah, so that's why we saw this. We were like, okay, it's the start of bear season. It's the start of bear season. Yeah, of course, symmetrical triangle, there's rallies, right? But the skinny pink line has already become a resistance. It was support. Once broken, becomes resistance, right? And we've been trying to break above the skinny pink line ever since, but we failed, right? Could this thing happen as well? Sure. But now we are going close towards the support line. Ooh, scary stuff. We could get mountain ranges here. We could still head lower, right? And yeah, we could get, I don't know, something else, something like a falling channel as well. The continuation, right? We could get 3 waves down. Something like that, right? Again, we need Bitcoin to remain its bullish trend. And we also need Ethereum Classic to break back up above the skinny pink line, stay above the skinny pink line, and then pump. We take a trade up, right? But now we're under it. So we continue respecting the skinny pink line by staying bias, bearish bias. Yeah, the bearish trend is still on, right? We're hopeful that it rises up. And if it does rise up, we have a target here at 93. We're hopeful that it happens. But we're also pragmatic that we could also get mountain ranges here, right? So if I click the eye and I do something like this, this could become a descending triangle, right? Mountain 1, mountain 2, mountain 3, we collapse lower. So, okay, I forgot what's the question. Yeah, answer the question. So some alts may go higher. Yeah, so because we see a bullish chart pattern, and if BTC, there'll be a what do you call outliers, right? When things are rising, right? Like for example, AI coins, right? If you look at AGIX, AGIX was rising, and AGIX is already let me see, or Stacks as well, right? Stacks is an outlier. It is already above the skinny pink line, right? And we were consolidating above it, not exactly consolidating. Yeah, we retraced and we continued rising higher because Stacks is already in a bullish trend. So we respect the skinny pink line. If you go into Stacks at the very bottom, you stay bias bullish because more likely than not, more upside will be coming because the momentum has already switched bullish for Stacks, right? This is what you call an outlier. AGIX as well is an outlier, right? Look at AGIX. Holy shit. Outlier? Yeah. Above skinny pink line? Yeah. So, more upside. Yeah, we're expecting more upside. But of course, no guarantees, right? We need to see the chart pattern first. But yeah, we're consolidating. We are leaning bullish for AGIX, right? But not everyone's like that, right? If you look at the other larger coins, Ethereum, is Ethereum above the skinny pink line? Are we consolidating above the skinny pink line? Like stacks, like AGIX? No, right? Another coin. Is XRP above the skinny pink line? Consolidating above the skinny pink line? No, we're still under the skinny pink line. The trend is still bearish for XRP, right? If you look at the other coins, right, in general, right, very easy to do that. You just go to total. Total 2 is everything except Bitcoin, right? Are we in a bullish trend for altcoins in general, right? Total 2 is all altcoins. Ethereum is an altcoin. No, we're not. We're not. It's just AGIX is an outlier. Stacks is an outlier. But altcoins in general are still bearish. So yeah, so that's what I mean, right? So ETC has the potential to be an outlier. Doesn't mean it's gonna happen. It just has that potential, right? So cheers! Great thumbnail. Yeah, I know, Elvis. 1950s and 1960s belongs to Elvis. 1970s belongs to... Who does it belong to? I forgot who it belongs to. But 1980s and 1990s belongs to Michael Jackson. And then 2000s belongs to Eminem. And Linkin Park. Yeah. So, yeah, I went to a Linkin Park concert when they came around. I was like, oh, that was awesome. That was awesome. So next time in future, if you have a band that you're very... that you like, right, and they have a concert in your area, you should go. You should go, because you may not see them again. There are some bands which I like, which I will never see again, like Oasis, right? I will never see Oasis. I will never see Queen. Of course, Queen is way before, but yeah, these are bands I like. There's also another band which I like, which is actually Coldplay. I would love to go to a Coldplay concert. But yeah, Coldplay is still doing tours, So if you've never gone to a Coldplay concert, you should, because Coldplay is a legend. They are legends, absolute legends. So yeah, there you go. So I think if you are a young girl, I don't think you are younger. You probably won't be watching. But if you are younger watching me, and if Blackpink is in your area, you should go and check out Blackpink, right? Or if you're a fan of BTS, right? I think the 2020s belongs to BTS, Blackpink. And if you're a fan of Blackpink, BTS, go to their concert. Now BTS is already gone. They've already broken up. So I don't think, maybe in future, but they're just not together anymore, right? Blackpink is still together, but they're not going to be together forever. So if you're a fan of Blackpink, you should check them out, right? So yeah, there you go. 0H. Why does a gap need to be filled though? Is it manipulation or what? No, it's just theory. The CME Gap Theory. Let me explain to you. How do you see this? You go to CME, right? CME Group Inc. So if you go back in history, right? Every time, right, there is a gap. Okay, let's just start from here. What are you doing, bro? Yeah. So every time there is a gap, right? So let's say, for example, there's a gap here, and we were dropping. There's another gap here, right? The point is that we'll always fill the gap. Fill, right? Again, gap here. What happens? We fill the gap, right? Every time there's a gap, right? Gap, immediately filled. Gap, filled. Every time there's a gap, filled. We always fill the gaps, right? Again, there's a gap over here. What happened? We filled it up. Right? Again, there's a gap over here. What happened? We filled it up, even though price dropped like to 4,000, right? But there was once a gap came over here. 9,007. It never got filled. Right? And it just went parabolic. That's why when this was happening, right, when BTC was forming its ABCDE, I was actually expecting a drop from here, maybe back under the skinny pink line. But no, we're already above the skinny pink line. But things just remain bullish. If we were to drop down to fill the gap, we would have invalidated everything. But yeah, the trend was already bullish. The momentum was already bullish. So we did not come back down to fill the gap. So this was the one gap that never got filled. There's another gap over here, right, at 25,000. What happened? We filled it up. Gap, filled it up, right? So this is the only gap that never got filled. So that's why I am leaning towards potentially, doesn't mean it's gonna happen, potentially for this gap to be filled, right? And this could be the setup of a mountain for us to head lower towards 9,000. Potentially, doesn't mean it's gonna happen, right? Moreover, on Bitcoin CME futures, we are still under the skinny pink line. Do you see that? The trend is still bearish. So yeah, but be rest assured that if it were to drop towards 9,000, right, to fill the gap, you can breathe. Why? Because there's also a gap over here at 35,000. So if we were to drop down here, fill the gap, you can be sure that the theory is going to, I mean, if you were to follow the theory, right, we will come back up. According to the theory, if it does happen, we will come back up to hit 35,000. So from 9,000 or 8,000, okay, let's put it at 9, where the gap is. Okay, let's put it where the gap is. If you go up here, that's 200%. That's a lot of mullah, right? So yeah, there you go. Moreover, if you want to follow the gap, right, there's a gap here. We could hit the skinny pink line and come back down and fill the gap here, right? You see that? There's a gap here. So be careful about going long. We're not saying don't go long. We're saying, you know, yes, you can argue this is the inverse head and shoulders. Yes, we could be reversing from here. But I'm not particularly that confident yet because we're still under the skinny pink line. The bearish trend is still on. So yeah, we might peekaboo a little bit above it, fill up this gap. Right, there's a gap here. There are two gaps here. I love it when I see a gap at the top. Yeah, so we might fill gap 1 and then we come back down. And then we fill the 9,000 gap and we come back up. Again, this is just theory. No guarantees and all. It's all pure theories. So yeah, there you go. Joseph says, thanks, Skinny. Love hearing you do your stuff. Cheers. You're welcome. A better tomorrow says, always great hearing your analysis. You are welcome. Risk management is key. Watch the whole video. Exactly. Risk management and edge. You must have an edge as a trader. Learned a lot in this video. Types of traders was great. Great. Skinny 60s is the new 40s. Yes, sir. Markets are wrecked again. Are they? Thank you so much for sharing your time with us. I learned a lot. You are welcome. Thanks a lot, Skinny. You're a very nice guy. You are welcome. All right, boys and girls. I guess that's it for today's Crypto TA. Hope you guys enjoyed it. Not Crypto TA. Yeah, geez, Crypto TA. Answering your questions. Hope you guys enjoyed it. See you in the next one, right? See you. Ta-ta.